Good morning and happy Thursday out there. Hope everybody's having a great morning. We're going to talk a little bit about just how big the investor market is here in the Phoenix area. It's really kind of hard to move around the numbers and get a clear picture, but we're going to drive through the weeds anyway and see what we can come up with. The number of listings we have today are 6,888. 6,888. Now we're going to jump into a couple of articles here on interest rates and mortgage-backed securities as well. We have 4,222 homes come on the market in the past 7 days, with 3,836 go under contract. That's a difference of 386 consistently. That's what we've been seeing most of the month. You'll remember it used to be really easy. We'd have 4,100 homes come on, 4,100 homes go under contract. They gobbled them up as fast as they came on. Subtle changes are happening now, particularly in the inventory between 400 and 600,000 as we looked at yesterday. So right here, what we're going to do is we're going to take a look at a couple things. Mortgage interest rates are starting to edge up ever so slightly. They're looking at today 2.97 versus yesterday 2.99. They're still below 3, so nothing to panic about. There is some chatter when you look at some of the mortgage news that says that, let's see, it was on here just about an hour ago, but there is reason for them to believe that the bond market's going to move in a direction that rates will kind of start slowly coming up. And here is what I found from Realtor.com. See this chart? This is active listing count. Kind of looks very similar to what we saw when we look at it in our local market, isn't it? As I said yesterday when I had a friend that was talking about what was going on in his small town, I said, well, that's going on everywhere. Every city in every state. And here Realtor.com verifies that. There's the inventory count going up. This is 2020, the green line. It's almost exactly like what we see here in Phoenix. So we are not in a unique situation. Now, I did go back and I looked at 2019 and Market Watch, kind of to see what they had to say in real estate. And it's interesting, you were talking about the Feds increasing, or are they decreasing their mortgage holdings? And this is a chart from the St. Louis Fed, and it shows, what they're buying as far as MBS, mortgage-backed securities, right? And Terry says here it's going to stay tough for first-time buyers. I think it is, Terry. I think it is. I don't know for how long. We may need a year, but we'll see. This article is interesting, though. It says, while rates have edged back up to 3.75, they remain low by historical standards, and lower rates matter to the size of the Fed's mortgage portfolio, because when loans and bonds pay off quickly, cash comes in. So they're talking about rates that edged up to 3.75 at historic lows in 2019, and here we are at 2.97. So what are they doing with their mortgage-backed securities? Well, they haven't slowed down, folks. You can see this chart right here. They just going up and up and up. And that's what the market is watching closely. How long is the Fed going to continue to purchase mortgage-backed securities? Right now, they're doing it at the tune of $40 billion a month. Basically, they're just holding them on their balance sheet. What they do with them in a couple of years, who knows? It's a very complicated business, but that's what's keeping rates low. If they back off on these purchases, then rates will go up. There's a direct connection there. Now, what's going on with investor traffic? You see a lot of articles out there about how investors are purchasing all these homes and turning them into rentals. Probably the largest transactions are by the large institutional investors that actually buy these block of homes that were already rentals. So just transferring ownership. So that doesn't affect the average buyer. There's 3 different classifications of renters. There's institutional, and then there's large group, and then there's individual investors. So it's hard to get a handle on the difference between, to pick out the individual investors. Let's say me, I go out and buy 1 rental, or I buy 2. There really isn't a way to go grab the data unless you look and you see that it's an LLC and they're using it as a rental. But I mean, who's got time for that kind of data, right? So what we're seeing is a real uptick in iBuyer traffic, which is Open Door, OfferPad, and Zillow, and to a small extent, Redfin. Redfin will buy homes. But Those investors, the iBuyers, they don't buy them and turn them into rentals. They purchase them and they turn around and sell them in 60 days. They try to sell them in 30 days, but sometimes they put them on the market and they sell them in 60 days. And you never get an opportunity to compete with them because you don't even know that's happening. People fill out the request to sell their home to one of the top three, either Zillow, Opendoor, or OfferPad online, and it's not transparent at all. You don't even see. And you don't even know that that home was purchased until Opendoor puts it on the market. So that's not really acing you out of anything. So it's and people have to realize that when you get an offer from these big three, it's very, very low. And on top of that, they charge you a 7.5% service fee, ding you pretty hard for inspections, and it's expensive, but it's convenient. Now, small investors, there's some guys in the market and gals in the market that just come in and they work with hard money lenders, and they're able to purchase a home based on what the future value is. In other words, the lender says, well, when that thing's remodeled, I think it's going to be worth $410. So they'll start with that number and work backwards and then give you an offer on your home. They go in and they fix it up. That can be convenient as well. If you've got a home that you're wanting to sell and it's kind of tired and it needs some work, it's got popcorn ceilings, there's nothing else really going on with it, you've got a lot of repairs that people are going to find out when they inspect the home, maybe it's best to go ahead and sell to an investor, and you'll probably net the same, because a lot of these small investors come in and they pay for your closing costs and they pay for all your realtor fees. So something to look at if you're thinking about selling a home that you know is going to need a little bit of work. They come in, they offer cash, you get to pick your closing date. It's convenient, and it's better than using those iBuyers. These individual investors, I can go out and find 2 or 3 to bid on your home, and that can be very convenient. But getting back to what's going on in the market here, let's take a look. This is an article here in Realtor.com. Property investors are exasperating supply shortages in the majority of the largest U.S. metro areas. Terry has a comment here that says, I heard if there are foreclosures, banks will just package them and sell them to BlackRock, etc. Won't even hit the market. Terry, I think there's a lot of truth to that. I think there is such demand for homes that if we were to have foreclosures, these people are just standing back with their cash and they're waiting. Money's cheap right now. They're taking advantage of it. Even the 3 big institutional places, money's so cheap, they're buying up things like crazy. But here's the kicker. All of them are losing money like crazy. And I don't know how they can lose money in a market as brisk as this. So if the market kind of balances out and gets a little flat, I don't know. Zillow is losing money on the homes they purchase. They only make money on selling ads to real estate agents. Perspective says, as a first-time buyer, I agree. I definitely needed some extra capital and had to be flexible with my expectations. After 4 months, we struck a deal, so it's not impossible. Tough for sure. Congratulations. Glad you got that one to work. Getting back to the article here, it says, across the U.S., red-hot competitive housing market, real estate shortages are being exacerbated in a majority of the largest cities by property investors, according to a report released by Realtor.com. And guess what one of the hardest hit ones is? Us. Phoenix was the city where investors contributed most to the supply shortages, taking a net total of 429 homes off the market in April. Charlotte, North Carolina came in second. So they took off 429 homes that would have showed up in this number, 4,222 homes on the market in the past 7 days and under contract with 3836. So hidden in those numbers that we don't see is almost 400 homes that investors bought. It's rather significant. But in that 400, here's what we don't know. And we get into the Cromford report, and it shows, and it's always hard to read, I know when I put this up here, but I'll read it here for you. It's saying that over the past 3 or 4 months, the percentage of single-family homes purchased to rent to a third party has increased from 14% to around 18% in Maricopa County. We've seen much higher percentages in the past, particularly between 2009 and 2014. So the current level is the highest level of investor traffic buying since 2014. The peak buying month for investors was July 2012 with more than 33%. Now, 2012, that was when we were just recovering from the big real estate crash, and investors were coming in and buying these houses that people walked away from. And they had stripped the copper, they had taken out the AC, they took out the ceiling fans. So we needed those investors to come in and purchase those. A lot of them they purchased, fixed up, put back on the market in 2013 and 14, but many of them they purchased and turned into rentals because there was a demand for rentals because people lost their homes. Now, so 33% was huge, but there was not a whole lot of purchasing going on by just the general buyers in the market. The percentage always seems to be a bit high during the third quarter, mainly because investors are not put off by the high temperatures of summer like owner occupants are. So here's what's interesting. In the last 3 months, the buyers with more than 200 properties added are Open Door. They bought 1,034. Here's one. It's out of Scottsdale called Progress Residential. They bought 660 properties. Now, the Open Door properties, there's 1,000 of them that they bought that they're going to flip. They're going to put them back on the market. So you didn't get a net loss on that. These 660 properties, you can bet they're going to be turned into rentals. This one is out of Dallas, Texas. They bought 395 properties. And then there's one on Germain Road, which is OfferPad. They bought 262. Again, those are going to be flipped. And you have Zillow, which bought 224. So you can see that Open Door is the big leader when it comes to buying homes and flipping them. Now, underneath all that we can't see are the individual investors. So we can't see just how much the mom and pop people are out there that have purchased homes and what their impact is. Typically, they don't. I bumped into a button there and it changed screens. Typically, they don't really compete with you when you're going out looking at something on the MLS. Most of the smaller investors are doing wholesaling and buying homes that they've heard of that may want to come up for sale. In other words, you've got a neighbor down the street, and maybe she's going into assisted living, and that's where the investors come in and go, I'll purchase the house from you. You, as an individual buyer, never saw it because it never hit the MLS. That's why sometimes on the MLS you'll see a listing that as soon as it comes on, it's pending. Well, that's because they negotiated without it being listed, but they still put it on the MLS so they could record it. So a lot of this stuff happens in the weeds and you never see it. The challenge is, I also don't believe that the large institutional investors are coming in and buying one home here and one home there. They're starting to a little bit more than usual, but then again, they're kind of staying out of the multiple listing service listings because they don't feel that the bargain is there. Unless somebody's priced it extremely low, then they're going to scoop in and try to bid it up, and that's where you get bit. That's where you end up fighting with the investors. This is probably going to slow down. We're seeing a lot of this investor traffic right now because Phoenix is favorable to them. The return on investment is good because the demand for rentals is so strong. So is demand going to back off for rentals? Probably not anytime soon. But if the home prices continue to escalate, then they lose their luster as far as purchasing a home and turning it into a rental. So that's something to watch. But it's I don't really see, I think down in below $300,000, if there's still anything out there below $300,000, you can bet that you're going to end up competing with an investor at some point because the math works. They can purchase it, put in maybe $20,000 and put it on the rental market, or they can fix and flip. So we'll continue to see that. But as you look at that, we went from 14% to 18%. It's not big enough to really wipe things out and exasperate us and make us feel like it's unfair, but it's out there and it's always going to be out there, and it will change. It will get larger, it'll get smaller, and that's just the way it goes. Hey, Pat is going to be on the call tomorrow at 3 o'clock, and he's back, so we're going to turn that into a Q&A tomorrow. Let's see, we have Rich. Keep an eye on Boise as a precursor to a more general housing correction. That may be true. Boise may be something to watch. Tomorrow's going to be a Q&A, so I encourage you to get on and ask us any questions that you want. Now, next week, I may or may not be on in the morning. I'm taking a trip to North Dakota, and I'm going to be up there until probably, I think, Thursday afternoon. So I'm going to have a fun time and taking all of my camera equipment and my drone. So when I do come on, I'll have some great pictures for you. Take on a great Thursday and have a good weekend.